Hello guys, and welcome back to the channel. So as we all know, there is a crisis going on in Ukraine and Russia, and I'm doing a little bit of video series on how this affects certain assets and if those assets are worth investing. I came across ARK Invest and they are significantly down from the top and they're getting a lot of hate. And as you can make a lot of money on being contrarian and not thinking, just going with the herd. And ARK is getting a lot of hate right now. And I was researching a bit if because they are down so much that if certain things are true, they might be a value buy, And then I came across a fantastic video in which they are disclosing their strategy. They're explaining exactly how they are thinking, which is super convincing to me. And I will let you make your own decision after this video. This is not investment advice. And by the way, if you like this content, make sure you hit the subscribe button so you don't miss any of the future videos. So let's go over to my computer. So first of all, ARK, I think, is getting a lot of unjust hate because they are all the time emphasize that you should have a 5-year time horizon, And yes, their last 1 year performance has been catastrophic. But if you compare them to the S&P 500 in the last 5 years, they are still up 203% versus the 83% of the S&P 500. So this is very interesting to see that she is, despite all the hate that she's getting, she's still way out producing the S&P 500. And now I want to go over to this video with Meet Kevin that he did. And it's a very long video, so I just want to give you the gem from this video where they explain exactly how they invest. And I think it's a must-see for everyone who is thinking about ARK, or maybe you just want to pick out companies that you want to buy from ARK. And then Meet Kevin does this interview with Brett Winton, and he's the chief analyst at ARK Invest. And he's very high up in ARK, so it's a very important video to listen to.
Yeah, one of the themes of this talk that we've had, and thank you so much for it, is that you regularly talk about valuing intangibles specifically with a focus on human capital and management. I think nobody else really talks about that, but that's actually where the key and true value is. So I think you're hitting the nail on the head. Thank you for that.
Well, I think, it's two things, because we focus on basically, like the company's strategic positioning. How are they, is the management agile enough to get to the opportunity that we see on the horizon? And then we also quantify the opportunity. So every position we invest in, we have a 5-year price target that's based on not that I'm a technological optimist buying it at the end, but that I'm selling to somebody who's just buying for cash flow. As in, there's a massive multiple compression that's built into our forecast at the individual security level. And so I think that, there's a lot of value. And one of the things from the start of the firm that actually really surprised me is that the work that we were doing was not work that venture capitalists were doing, and it wasn't work like the consultants and stuff were doing. And so it was really evident to us, for instance, when Uber was raising money in private rounds at an extremely high valuation, where we couldn't underwrite the position given how much value it accrued when it IPO'd, because we do. And by the way, for now, it's the same with Airbnb, where it's hard. It's within our valuation framework. The intangible assets those companies have just isn't worth it. It doesn't deliver to us our compounded rate of return that we require. And then you turn around, like having done that work, if it looks compelling, or I should say, it's only worth doing that work if you believe in the management team and kind of like the foundation that's inside the company that it can access that thing, right? And so our first screen at the security level is like, what is the people management culture? How is this a company that's in a product leadership position? How are they going to protect their margins or generate extra normal cash flow? Can they execute on this plan? And then if it qualifies on that basis, then we go through kind of the laborious process of underwriting and being, well, then 5 years from now, what does this company look like if I'm a forced seller to somebody that doesn't believe in the things I believe in? And then if it, clears our hurdle rate of return, which is 15%, but now most of our positions are in fact, all of our positions are well above that. But
did you hear that most of the positions, based on the calculations, are well above 15% compounded annual return, looking into the 5 years? Take notes.
Sure. Would be a rough leveling. over 5 years, then it's an interesting investable asset for us. But I think a lot of times there's two perceptions that people have that I think are wrong. One, oh, you invest in unprofitable tech. Not true. 8 of our top 10 holdings are profitable, or at least on an operating earnings basis. And then 1 is about to be. So 7 out of the top 10 are profitable. And then the other 3 are in the genome space, where it's, if you're doing therapeutics, it's a whole different game. And then the other perception is kind of like, oh, you just invest in memes or the thing that everybody's talking about. No. What we do is we actually underwrite the things that people, as in we say, what is this actually going to be worth? Not, oh, this is a great idea, but what do I think is the financial value attributable to this? And so then that puts a cash flow generation number on the intangible assets that the company have. And so I think over a reasonable time horizon, we should be considered deep value investors. I'm buying intangible assets that are on market sale prices in my view right now, and waiting for the world to recognize the value of those assets. And so just like a value investor that's like, hey, I'm buying this way below book. Well, I'm buying these companies that way below tangible or intangible. And the challenge with it is that value is uncertain, and so and heavily uncertain. That's why these assets are so volatile, because when people believe the narrative, they say, oh, it must be worth infinite, and when they get it, they say, hey, oh, it must be worth 0. Whereas I actually have a number, like, this is what it's going to be worth.
This is what it's worth. Wow.
Yeah, and so it's kind of the whole game.
I appreciate it.
Wow, what an awesome explanation. So basically, if it's true what they're saying, then probably the companies that are investing in, they went from a pendulum swing of everybody thinking they were worth infinite 2021 up to 2021 January, and right now, because of the Russia, Ukraine, the Fed, all these fears, everybody's saying they're worthless, sell at any cost. So this is very interesting, and for me as an investor, it was really, really, really reassuring to hear how they're thinking. And there's a hidden gem at the end that I want to play to you, because I think if you're thinking about investing in ARK Invest, it's very, very important that you play the right time horizon. And he actually says something very funny here.
Appreciate you for that. Brett, this was absolutely amazing. Any last things that you want to say to the YouTube audience?
No, I think that the main message from us, and I think for everybody, and for you, Kevin, you who have, I think, sold out of and bought into like 50 positions based on your YouTube history over the last few years, is that
burn.
If you're investing, you have to invest over a time horizon that makes sense, and you should actually do everything in your power to not mechanically limit that time horizon. You should have a low time travel. So what does that mean? It means don't invest what you want to spend next year. Invest what you only want to spend 5 years from now or 10 years from now, and then invest in long-term assets, because those are the ones that can most predictably appreciate over the long term. So that's lower your time preference. And it's hard to do so because the information environment, promulgated by guys like you, Kevin, is actually extremely short term. Yes.
Burn again.
and so, but the actual duration that makes sense for you as a human is not for the next 3 months. It's for what are you doing with the next decade? And I think that. So the way to successfully tap that, Schwab did a study, I think it was Schwab, I'm not sure, one of the brokerages, who are our most successful traders on the platform. They looked at all of their accounts, and it's who has done the best over the past, I don't know what time frame they looked over. And they identified a subselection of accounts. It's what's unique about these people? The unique thing about them is that they'd forgotten they had accounts.
And I'll leave you with that, guys. Let me know what you think about ARK, and I hope to see you in the next video. Bye-bye.